Charlie Munger, through intelligent investing, has made a lot of money in his life, and he's done it in many different ways, whether it be through investing in stocks, in bonds, in great businesses, cigar butts, and even in special situations. And for that reason, I want to start a short series on the channel, and this is going to be the first video of probably about a 3-part series, basically going through some of Charlie Munger's greatest hits, some of his best investments ever, and I want to cover investments in a few of those different categories. I think that there's a lot that the everyday investor can learn from all of these different types of Charlie Munger investments, and in this first video on the series, I actually want to revisit a story that I've told on the channel here before, which is about an investment that Charlie Munger made in the early 2000s in a business called Tenneco, and in Charlie Munger's words, he made about $80 million by taking basically no risk. Charlie Munger then took that $80 million and actually gave it to Li Lu at Himalaya Capital, who at the time Charlie last spoke about this investment had turned it into $300 or $400 million. So that is the topic for today's video, and if you want to see the next couple of videos in this Charlie Munger greatest hits kind of series, be sure to hit like and also subscribe to the channel so that you can see those future videos. And before we get into this video, we do have a sponsor, and this video is sponsored by Hatch. Hatch is the platform that I personally use for all of my US investing for me as a Kiwi based here in New Zealand. And Hatch is asking you to think about what your big and small tomorrow goals look like. For me, the goal has always been financial freedom, putting a little bit away today with the aim being that I can do the things I want to do tomorrow. Everyone's tomorrow looks different, whether you want to buy your ultimate dream car, travel the world, or become financially independent. Reaching your goals starts by taking the first step. That's why I invest with Hatch, to help make my plans a reality. And if you want to get started investing with Hatch, check out the first link in the description where you can get a free $20 New Zealand dollar top up when you make your first deposit of $100 New Zealand dollars or more before the 31st of December 2022. Now, there are 3 resources I want to give a shout out to that helped me put together some of the facts for this video. Firstly is a YouTube channel called IDP, which actually shows the clip of Charlie Munger talking about this investment in Tenneco. A blog called Broken Leg Investing, which pulled a lot of the financial metrics from the early 2000s about Tenneco. And finally, Focus Compounding, which is a podcast I actually listen to pretty regularly. They did a great breakdown on the Tenneco investment from Charlie Munger back in early 2021. Now, I want to start this video off actually by playing a short clip from Charlie Munger. This is a clip taken after the Daily Journal annual meeting a few years ago, where he talked about the Tenneco investment. He didn't mention the company specifically, but he says some really interesting things here about how he was thinking about the investment at the time.
I read Barron's for 50 years. In 50 years, I found one investment opportunity in Barron's, out of which I made about $80 million with almost no risk. I took the $80 million and gave it to Li Lu, who turned it into $400 or $500 million. It was a little automotive supply company. Anyway, it was a cigar butt. It was the Monroe shock absorber and all that stuff. The stock was $1, and the junk bonds was paid 11 3/8%, were 35. And when I bought the junk bonds, they paid me the 35%, and they went right to 107 when they called. You know, it was, and then the stock went from 1 to 40, but of course I sold my stock at 15. I kind of knew, based on experience, how sticky some of that auto secondary market was, and how many old cars needed Monroe shock absorbers, and I just knew it was too cheap. I didn't know it would work for sure, but I knew that. I just, as I say, people were afraid it was going to go broke, obviously, if their bonds were selling at 35.
So pretty interesting story there from Charlie. He read Barron's for 50 years, which, every single week was filled with stock tips. He ended up, after 50 years of reading Barron's, pouncing on a single stock investment idea, which was Tenneco, which is the company that I will cover in this video. Made $80 million with basically no risk. So how on earth does that happen? Well, let's kind of talk through basically what Tenneco is and what the situation was at the time. Well, Tenneco is basically an auto parts manufacturer. It's an okay business. part of their business that Charlie Munger was familiar with was basically this Monroe shock absorber, which he felt was a pretty sticky product, particularly in many older vehicles. And he recognized that Tenneco had kind of an okay operating business, but it was a situation where the company had a lot of debt and they were really kind of struggling to meet their debt servicing obligations. And there was a lot of fear in the market at the time, basically around Tenneco going bankrupt. Now, in the 1990s, Tenneco produced EBITDA of about $300 to $400 million a year. They produced net income of $250 to $300 million a year, and the stock hit an all-time high in the 1990s of about $56 per share. Now, when Charlie Munger got interested in investing in Tenneco, having read about the stock and Barron's, we're in kind of the early 2000s, and net income had gone from that $250 or $300 million a year to about negative $40 million a year, and they actually had kind of 1 year in there which was negative $420 million. So they turned into a business that was producing reasonably consistent cash flows to a company that was suddenly losing a lot of money and producing negative earnings. They got to a point where they had negative shareholders' equity, they had increasing levels of debt, and all kind of along the storyline here, there were increasingly more and more fears of bankruptcy. Now, one of the interesting things with Tenneco was that if you look at the operating cash flow from the business, Tenneco actually consistently produced positive operating cash flow, and it's kind of clear from looking at that data that Tenneco was an okay operating business. They had really just got themselves into a situation where they had taken on too much debt. There is some kind of capital expenditure that the business has to, basically spend each year out of that operating cash flow. They had a huge amount of money that was being funneled towards trying to service this massive amount of debt, and they got themselves into a situation where they were basically just running out of money. And just to give you a feel for how over-leveraged Tenneco became, it got down to a point where the market cap was as low as about $80 million, yet the enterprise value was about $1.6 billion. So an analogy I always like to use just to explain the difference between market cap and enterprise value, which factors in kind of debt and cash that the business might have, is just to think about it like a simple real estate property. So think of Tenneco like a $1.6 billion real estate property. It has about $1.52 billion of debt on it, so kind of the equity value of the house is only about $80 million. So even though the value of the enterprise is about $1.6 billion, they've got so much debt that there's really only this thin little slice of about $80 million of equity remaining, or at least that's what the market was valuing it at kind of at the time. And leverage, of course, is a double-edged sword. If that enterprise value was to go from, say, 1.6 billion to 2 billion, the market cap or the equity would grow very substantially. If there is a $300 or $400 million increase in the enterprise value, you're going to get that same $300 or $400 million increase on the market cap, only you're starting at a very low base. The market cap at the time was only $80 million. So although there's certainly high chances of downside here, and of course if Tenneco were to go bankrupt, the stock would go to zero, you can see that there is also potential for a lot of upside with all the leverage built into this situation. Now, one of the fascinating things here with Tenneco is that Charlie Munger actually invested in Tenneco in two different ways. He bought the stock, I guess, as would expect from a very well-known stock investor, but he actually also bought the bonds of Tenneco, and I think there's probably a couple of reasons why he bought both. The stock and the bonds had slightly different kind of upside and downside potential. The bonds were probably slightly lower risk in terms of downside protection, but a little less upside as well. Whereas the stock had the potential for a lot of upside, as I've kind of just talked through with, this very leveraged kind of situation, but there was also wipeout risk. If Tenneco did go into bankruptcy, there was, it was basically a certainty that the stock would go to zero as well. So firstly, let's take a look at the bonds. Now, Tenneco had bonds out that paid 11 3/8% interest, or 11.375% interest, and they were trading at 35 cents on the dollar. So that just gives you a feel for how much fear there was around bondholders not getting the cash back from, Tenneco going into bankruptcy. So since Charlie Munger was able to buy those, 11% and some change interest bonds at 35 cents on the dollar, that gave him basically annual interest payments of about 32.5%. So assuming that Tenneco could continue to meet their interest obligations, he was going to buy bonds yielding 30+%, which is a massive kind of coupon, massive interest payment to get on your bond investment. There is also more upside than that. So if Tenneco can kind of sort their financing problems out and the bond market becomes more confident in Tenneco being able to service their debt over time, then there's a good chance that those bonds trading at 35 cents on the dollar re-rate back closer to par, or back to $1 on the dollar. And that is actually exactly what happened, or actually they did even slightly better than that again. So a couple of years later, Tenneco actually went through a bit of a refinancing exercise, and they repurchased those bonds at $1.07. So Charlie Munger rode those bonds from 35 cents to $1.07, so a little more than a 3x return on the bond investment. Plus, of course, he was getting about 32.5% interest on the bonds every year in the meantime. Now, although the upside on that bond investment was fantastic and the stock was even better, which we'll talk about in a sec, Charlie Munger talked about this investment as if it had basically no risk. And I believe Charlie Munger probably thought there was basically no risk because he bought these bonds so cheap. He bought them at 35 cents on the dollar, so that even if Tenneco did go into bankruptcy and the bondholders took a haircut and got paid only, say, 50 cents on the dollar, he bought them at 35 cents on the dollar. So I think that is massive risk mitigation from Munger, and that's probably one of the reasons why he talks about it in that way. And of course, Tenneco did have a good operating business. It was really just the fact that they got over leveraged was what was really causing the issues. So if Tenneco did go bankrupt and that bond holding was converted to equity, Munger would own a reasonable business, and like I say, even if he got a haircut, he bought those bonds at such a discount that he was probably still likely to do pretty well. Now, of course, Tenneco didn't go bankrupt, and the bond investment worked out great, just as I said earlier, which means that the stock actually did even better. So the stock obviously didn't have the downside protection if Tenneco were to go into a bankruptcy like the bond investment probably did, but it had a lot more upside should Tenneco be able to get through some of these issues, and that is exactly what happened. So the investment thesis basically was that Tenneco can probably return to something like $300 to $400 million a year in EBITDA. And looking at similar kind of auto parts manufacturing type businesses at the time, it looked like the industry standard multiple of EBITDA was probably about 6.5 times. So if they could return to more normal kind of business operations, it's likely that the enterprise value would fall somewhere in the $2 to $2.6 billion range, which after you back out the debt of $1.52 billion, implied an equity value of about $430 million to about $1.08 billion. So that would take a stock that Charlie Munger probably paid somewhere in the $1 to $2 range for to anywhere from $10 to $27 per share. And again, that's basically exactly what happened. So Charlie Munger does say in the video he paid about $1 a share. Looking at some of the numbers and where the stock actually got down to, I'm guessing he probably paid somewhere around $1.50, something like that, maybe even closer to $2. But he ended up selling the stock for about $15, and Tenneco shares actually carried on much higher than that, as I'll put on the screen here. But nonetheless, to ride a stock from $1 or $2 a share up to 15, it's an exceptional result, and combine that with the bonds, which also gave him a 3x and 30% interest a year in the meantime, the whole Tenneco situation worked out exceptionally well for Charlie Munger. So of course, Charlie Munger has a reputation of the guy that convinced Buffett to buy great businesses at a fair price rather than fair businesses at a great price. But Charlie Munger himself in the early 2000s was still out buying cigar butts and was still out producing multi-baggers in the process. I think Tenneco is a fascinating example of that, and it's actually one of the only examples that I've seen of Charlie Munger making a bond investment as well. So it's a really different approach to what we've seen in other kind of great business investments, like, you know, the Coca-Cola investment or the Apple investment through Berkshire Hathaway, or even something like Munger buying into Costco, you know, personally in the early 2000s. So I do hope you enjoyed that story. If you did, please hit like and hit subscribe as well. That way you can see the next couple of Charlie Munger greatest hits videos coming up soon. But that's it for me for this one, and I'll see you on the next video. Cheers.